those guys are smarter than the people that are coming to them, and they do not have a big problem, and they're very capable of thinking it through themselves. The people that have the problem are the people who want to sell their services to them and are going to have to convince them that they have a problem. But so much of what you see when you talk about asset allocation, it's just merchandising. It's a way to make you think that if you don't know how to determine whether it should be 60-40 or 65-35, that you need these people. And you don't need them at all in investing. I mean, most of the professionals that tell you you're going to get in great trouble unless you listen to them and adopt and sign up for their services, they're good at selling. But it's what my brother-in-law, former brother-in-law that worked at the stockyards used to say, was that people would bring in cattle or something, and I'd say to them, how do you get the farmer to employ you to sell the Swift or Armour or Cudahy instead of the guy right next to you? I mean, it's a cow is a cow, and Armour's going to buy it the same way. And he gave me this disgusted look, and he said, Warren, it's not how you sell them, it's how you tell them. Well, there's a lot of that in Wall Street. Charlie?
Yeah, people have always had this craving to know the future. The king used to hire the magician or the forecaster, and he'd look in sheep guts or something for an answer as to how to handle the next war. And so there's always been a market for people who reported to know the future based on their expertise. And there's a lot of that still going on. It's just as crazy as when the king was hiring the forecaster who looked at the sheep guts. And people have an economic incentive to sell some nostrum. It can be sold over and over and over again. The really interesting figures are when you combine the underperformance of the market, say by the mutual fund industry, which is probably a couple of points per annum, that understates it. Now if you take all of the investors in the mutual funds who are constantly whipsawing from one fund to another by a bunch of brokers who want commissions, now you take a subnormal performance and it goes down another 3 or 4 percentage points due to the shuffling of the mutual fund investments. So the poor guy in the general public is getting a terrible result from contacting the experts. And these guys are heading the scout troop and the community chess drive and are locally reputable people. I think it's disgusting. It's much better to make a living by being part of a system that delivers value to the people who are buying the product. But nobody refrains from creating gambling casinos or something on my theory. If it'll work to make money, well, we tend to do it in this country.
Microphone 4.
Can you please elaborate your views on risk? You clearly aren't a fan of relying on statistical probabilities, and you highlight the need for $20 billion in cash to feel comfortable. Why is that the magic number, and has it changed over time?
Yeah, well, it isn't the magic number, and there is no magic number. I would get very worried about somebody that walked in every morning and told us precisely how many dollars of cash we needed to be, secured at 3 sigma or something like that. Charlie and I have had we saw a lot of problems develop in an organization that expressed their risks in sigma, and we even argued sometimes with the appropriateness of how they calculated their risk. And
it was truly horrible.
Yeah, and they were a lot smarter than we were. That's what was depressing. But we both have the same bent of mind, whereby we think about worst cases all the time, and then we add on a big margin of safety, and we don't want to go back to go. I mean, I enjoy tossing those papers in the other room, but I don't want to do it for a living again. So we undoubtedly build in layers of safety that others might regard as foolish. But we've got 600,000 shareholders, and we've got members of my family that have 80 or 90% of their net worth in the company. And I'm just not interested in explaining to them that we went broke because there was a 1/100th of 1% chance that we would go broke, and there was the remaining probability was filled by the chance of doubling our money. And I decided that that was just a good gamble to take. We're not going to do that. It doesn't mean that much. We are never going to risk what we have and need for what we don't have and don't need. We'll still find things to do where we can make money, but we don't have to stretch to do it. And it's my job, and Charlie thinks the same way.